Hi, and welcome to ECCB Connects. Are you a small business owner? Are you experiencing difficulty with accessing funding to help grow your business? On today's episode, we speak with CEO of the Eastern Caribbean Partial Credit Guarantee Corporation, Carmen Gomez-Trigg, as she explains how the ECPCGC is working to help small businesses in the region access financing easier. Stay with us. We'll be back after the break.
To avoid getting the coronavirus, remember to wash your hands thoroughly and frequently before and after preparing food, after using the toilet or changing a diaper for a baby, sick person, or the elderly, after blowing your nose, and after leaving large gatherings or moving away from persons who appear ill. Encourage others to wash their hands and also use an alcohol-based hand sanitizer of 60 to 70% solution. Stay away from events having large gatherings of people. You can expose yourself to more possible infections in large groups. Also, avoid sharing cutlery, cups, glassware, etc. with others. Viruses can linger on these items and may be transferred this way. Avoid shaking and holding hands, and hugging or keeping an infected person in close proximity. This is a message from the Ministry of Health and the National Emergency Management Agency, NEMA.
Carmen, welcome to ECCB Connects.
Thank you, Karina. Very glad to be here.
The ECCB Monetary Council took a decision in 2018 to establish the Eastern Caribbean Partial Credit Guarantee Corporation with the main goal of acting as guarantor or making access to finance easier for micro, small, and medium-sized businesses in the region. Now, tell us more about the mandate of the ECPCGC.
As you correctly said, the ECPCGC was set up by a decision of the Monetary Council. But prior to the setting up by the Monetary Council, there were some studies done by the World Bank in response to a credit crunch that was being faced by the MSMEs in the region. And this would have followed the 2008 decline and so on. So there was a little bit of a delay in the pickup, and we realized that the MSMEs are not doing as well as they could. The reason for this was that the commercial banks had a preference to lend to loans that had full collateral, consumer loans and mortgages and so on, rather than betting on the businesses of the small and medium enterprise sector. So having seen this gap, the World Bank would have done the research, and they came up with the partial credit guarantee scheme, which has been used globally with success to promote the MSME sector, and they decided that this would be a fitting solution to the problem being experienced in the Eastern Caribbean. So fast forward a couple of years, in 2018, a board of directors was formulated to run this organization. In 2019, we started to staff the organization. And behind the scenes, we've been doing a lot of the procedural work because this is a new startup. We're starting from ground zero. There was nothing in place apart from an operations manual. And together with my team, we put together policies and procedures and so on. And we are at the stage where we are now almost ready to launch. We'll be launching in June.
So, as you explained, you are acting as guarantor to help these small businesses get credit, make their lives and the development of these businesses easier. How does that actually work?
A credit guarantee is a tripartite arrangement between a guarantor, which is in this case is ECPCGC, a lender, which would be the banks and the ECCU, and a borrower, which would be the MSME. So the risk is spread three ways. How it is going to roll out is that if an MSME has a project, whether it's growth and development or purchase of capital equipment or just working capital needs, what we would do is we'd assess the project. Now, the guarantee is, we would not guarantee 100% of the loan that the MSME is looking for. We guarantee 75% of what the MSME is looking for. We guarantee loans up to a maximum of 300,000 EC dollars, so that the maximum guarantee we would give at any one time would be $225,000. Why do we do this? Okay. We do this because The MSME has to have some skin in the game. He must have a vested interest in making sure his project is successful, and therefore he must have a stake in it.
Right, so it's not as if I were starting up for the very first time and I needed some funding, capital to get me going. I actually, the owner, as a small business owner, you have to demonstrate that you have, like you said, some skin in the game, you've been there, and that you're worth taking the risk on.
Correct. Because one of the things we ask our bankers to do is to ensure that under normal circumstances, if the MSME had his collateral, that they would still go ahead and give that loan. The only thing missing from a normal loan is that he does not have the requisite amount of collateral, which is where we come in. But all the other conditions that the banker looks for must be in place. So once the banker sends us an application, we understand that he has vetted the character of the MSME, and he is satisfied that all the other conditions are fulfilled.
You explained just a little bit about going to the banker and the banker passing on this information. So it's the process for application. If you could tell us a little more about that.
Okay, so the MSME goes into his bank as per normal. We do know that some MSMEs do not have a relationship with the banks. Some prefer to go to the development banks and the credit unions. So those are going to be a part of our program as well. So the MSME goes into the financial institution of choice, and they put through an application for their project. The banker is going to do an assessment of the entire project, look at it, look at the projections, do a credit analysis, normal stuff that they would do under normal circumstances. Once they're satisfied that this loan is viable, that the MSME can repay the loan, very, very, very important. He must be able to repay the loan, that he can repay the loan, and that there's no exceptional risk on the project or on the MSME. Then he goes ahead and says, okay, you do not have enough collateral. We do have this fund which we can access. There is a fee payable to access this fund, but if you do not access this fund, there is no way we can give you the loan. So the banker takes him through all the rigors of the guarantee program, and he sends all of that to us. There's a collaborative arrangement between ourselves and the bankers, and we take it from there.
Carmen, you mentioned in the application process that the applicants that actually come to you have been basically approved as credit worthy by the financial institution to which they are coming. Is there a situation, or what happens when it gets to the ECPCGC? Is there a situation that can arise where the application, having met or gotten the stamp of approval, would not be successful?
I do think that we may have, although we are trying as far as possible to work with the financial institutions to make sure that we are on the same page with respect to credit analysis and so on. So I can't cite an incident where that can happen, but of course, you never know. The normal things sometimes are not applicable. What we do ask the financial institutions to do is to talk to us first if there's any doubt. So if you find someone looks a little bit dubious, then we can come together and collaborate, and we can give some pointers. We can say, okay, don't go any further with this one. We don't think it can fly, or so that we have a spirit of collaboration, which was fostered by my recent visits to the financial institutions in the various islands, because we want to broker that relationship to make sure that there's this movement and this flow of information back and forth, so that we don't have those incidences that you're talking about.
So as much as possible, it should be an almost automatic process once they've been given that go-ahead from the banks.
Yes, but we are going to do our own analysis. So it doesn't come from the bank and to us and then we give it a stamp of approval. No, we are going to look. There are certain unique indicators that we would look for. We do have the World Bank environmental and social safeguards framework that we have to work within, so which we are going to make available to the financial institutions. However, we are going to ensure that those things are adhered to, that the country laws and permits are in place and so on. So we've got to make sure that all of those things are in place. And if it is that we find that the financial institution has not been diligent in their has not done their due diligence, then we are going to revert back to them and say, this can't work, you need to fix this, so you need to fix that. But we would try as far as possible to make sure that all that we need to get is obtained from the financial institution.
Now, in terms of the persons or business owners who would be eligible, do you cater for one specific type of business, or is it that once the business owner qualifies through the commercial bank, that they could take advantage of this facility?
No, we understand that there are certain classes of clients who need this facility the most. Therefore, we ask that the loan must not be more than 300,000 EC dollars. We also ask that the revenue projections or actual revenues must be no more than 2 million EC dollars per annum. And we also ask that the employee headcount must be no more than 50 employees, either actual or projected. So that's the band of client that we're looking at, because we realize that is where the need is the greatest.
Now, how is the ECPCGC able to take on this risk of acting as guarantor for these small businesses?
Okay, so we were formed by 6 member countries, and each one of them would have put in $2 million US to fund the operations of the corporation. When I say fund, I mean that this is for our recurrent expenditure as well as money to put aside for the guarantee. So that's a fund that we're talking about, and that's how we're able to manage the guarantees, because we've got this tranche of money which we've invested. Whatever we've received already, we've invested to be able to generate revenues, because one of the core objectives of this corporation is to become sustainable. So we charge fees for the guarantees, and we also have interest that we get from whatever we invest to be able to fund our recurrent expenditure. So that's where the money bit comes from.
Now, you just mentioned that you serve 6 of the member countries in the ECCU. Which 6, and tell us why those 6 in particular?
The 6 countries that have signed on to the program are St. Kitts, of course, Antigua and Barbuda, Dominica, Grenada, St. Lucia, St. Vincent and the Grenadines. So those are the 6 countries. Those are independent states, and there are the 2 others, Angola and Montserrat, are still under the British Protectorate, so they have not signed on. They would have to get money from the British government to be able to put into the fund. They're not independent in their own right. So these 6 countries were able to face the World Bank as an independent country in its own right and get the necessary funding. I need to say that St. Kitts did not go to the World Bank. They were able to provide the funds out of their own coffers.
So when we spoke about the ECPCGC back initially in 2018 on ECCB Connects, the business, the operations were not up yet. You're getting ready. Now that what stage are you at in terms of serving clients and helping those small businesses access funding?
Okay, so we had some legal work to do. We had to set up a contract with the financial institutions. It was recently approved by the member states, was recently approved by the World Bank, because World Bank is an active partner in this. And we are hosting, we sent copies of this to all the financial institutions in the ECCU. And we are hosting a series of meetings right now with the executive teams of all these banks and explaining that agreement to them. So we send them that agreement as well as an application form. We call a financial institution application form, and they will complete this and send it back to us. Once we get it from them, we'll go to ECCB Supervision Department to get a letter of good standing on behalf of the commercial bank, and we would then use that to sign off on the guarantee. Once that guarantee is signed, then we can start accepting guarantees. I have to say that development banks and credit unions are also part of our remit, and we're working on the procedures for those as well, because they are not regulated by the ECCB, they're regulated by the national regulators. So we are working on setting up a framework for assessment of those institutions so that we can open the doors to them as well.
But it's good to know that in your quest and your fulfillment of your mandate, that you are taking into account the myriad of financial institutions that small businesses go to try to access funding. So, it makes it easier and as wide as possible for them to benefit.
Well, I have to say that our clientele, a lot of them feel very comfortable or more comfortable going to a development bank than to a commercial bank or to a credit union. And I have also to say that the level of penetration of credit unions in our region, in the Caribbean region, is very, very high. So you have credit unions having MSME departments or doing MSME loans. And we have to recognize and acknowledge that. And if we want to reach the clientele that we want to reach, we have to include the development banks and the credit unions into our fold. We've realized that MSMEs need some basic financial training and basic management training. We also know that there are a lot of trainers in the region. So we have received some assistance from the German Savings Bank, and we'll be putting in some of our own resources as well to be able to boost the training that is offered to the MSMEs in the region. Now, it's not just going to be training just like that. We're going to be talking to our financial institutions to determine where the gaps are, because we feel that if we do a needs analysis and we determine where the training is needed, it's going to be better received. So we'll be working with those stakeholders as well to determine exactly where the gaps are, and we'll be trying to close those gaps, because I know that our bankers have said that, the MSME goes to somebody to write a business plan, they don't understand the business plan and so on. So we are going to be working with them on that. The method of training that is going to be used is not a blackboard kind of training. It's going to be using interactive training series and so on. And we as ECPCGC would be doing some monitoring and evaluation post-training to determine whether the needs have in fact been met, whether there are still gaps and so on, so that we leave no stone unturned to make sure that our MSMEs grow and develop.
Yes, at the ECCB, we are familiar with the German Savings Bank because we do partner with them as well to facilitate some micro business training. But I'm quite pleased to hear that not only is the ECPCGC working to help the small businesses access finance, but actually provide some hands-on tools and expertise to help them as they seek to grow their businesses.
Yes, ma'am, we do.
Carmen, thank you so much for speaking with us today on ECCB Connects and for explaining how the ECPCGC is working to help small businesses grow.
Thank you so much for having me. As we go forward on this journey, I'd be happy to meet with you again to let our publics know exactly what's going on within the doors of the ECPCGC.
To view any episode of ECCB Connects anytime, any place at your convenience, check us out on YouTube, Facebook, and LinkedIn at ECCB Connects.
We've come to the end of this week's episode of ECCB Connects. Thanks for watching, and if you haven't already done so, be sure to follow us on social media at ECCB Connects. See you next week.